Market on close. We have just a few minutes left in our trading day, so it's time for the big picture. We'll welcome in our team from Charles Schwab. Joining us today, Michelle Gibley, the Director of International Research at Charles Schwab. Michelle, thanks for being with us as always. Now, I want to start first farthest east. In prepping for our interview, I noticed so many headlines, concerns about the Japanese bond market and the potential that Japan's ruling coalition could lose the majority in an important vote over the weekend.
Yeah, that's right. Japan has an election in the upper house of parliament this weekend, and JGB yields have risen this month ahead of time because there's concerns that spending could rise and taxes be cut in order to buy votes. The lack of liquidity in these markets, particularly at the 20 and 30-year tenors, is really exacerbated by traders avoiding the market ahead of the election. Now, we could see some slippage of fiscal discipline, and JGB yields are likely to rise over time. But the Bank of Japan and the Ministry of Finance have tools to address financial instability to the extent it happens. You know, we saw this in May. After yields spiked, the Bank of Japan announced a reduced pace of quantitative tightening, and the Ministry of Finance shifted issuance away from the longer-term bonds to shorter-term bonds in order to help calm the market. Now, we could see volatility in Japanese government bonds, particularly as we move into the weekend and on Monday. But this is likely a short-term factor for markets than a longer-term one.
So is it fair to say that you think that some of these concerns are overblown?
Yeah, I think the concerns are overblown. We think back to the unwind of the yen carry trade last year, and I think people are a little bit concerned that we could see a similar experience this time. But actually, a lot of traders, short-term speculative traders, are long Japanese, long the yen versus being short the yen a year ago. So the experience could be a little bit different this time.
And if the outcome of the election is that Japan's current ruling coalition does lose the majority, could that have any impact on the ongoing tariff discussions?
Yeah, certainly. Shiba is, popularity is very low. He could eventually be removed from office. This is an ongoing situation in Japan. They have a revolving door for the presidency there, the prime minister, but there's only so much that the upper house of parliament can do. And I think it's really just a little bit overblown.
And so while we're talking tariffs, I want to move us a bit closer to home and talk about the EU. We got reports from multiple outlets today saying that our president is escalating the demands in his trade negotiations with the EU, now pushing for a minimum tariff of between 15 and 20%. The EU Trade Commissioner gave a downbeat assessment of his recent talks with Washington. We also got similar commentary from Germany's chancellor, warning that he remains skeptical about offers to reduce sectoral tariffs. How does this change the conversation?
Yeah, I think that when we think about higher tariffs and the impact on markets, we haven't really seen a lot of concern. The markets are pretty calm about the idea of higher tariffs. And, if we look at May, the effective tariff in the US was just 8.9%, but that's on the rise. And, the tariff pause is set to end in 14 days. Markets and countries may be expecting another extension beyond August 1st or lower rates than announced in the letters. And we're not really seeing countries retaliate further this month. That includes the EU and Canada, both of whom have readied lists of U.S. goods for additional tariffs. And like you say, we are seeing negotiations ongoing, based on those reports that Trump is seeking 15 to 20% tariffs on EU goods. That's down from 30% announced just on Monday. So, another thing that's in the good news camp, positively, tensions between the U.S. and China appear to be easing based on NVIDIA being allowed to restart shipments to China and China conditionally approving a merger between chip design software companies Ansys and Synopsys earlier this week. There is a risk. There's a risk that market volatility could return if we see these large trade partners such as the EU, Japan, and Canada see higher rates on August 1st. And, sectoral tariffs continue to grow.
And we've constantly talked about the Fed on the show and if we're going to cut rates here at home. But while we have you with your expertise, the ECB also has its own meeting on July 24th. What's the expectation there? Are they expecting a rate cut?
Yeah, the ECB is expected to be on hold next week, but they could resume cuts in the fall. The ECB is on pause because they've made a lot of progress on inflation and they've had a lot of rate cuts. At the last ECB meeting, President Lagarde said that the rate cutting cycle was nearly concluded. But if inflation moderates further, either due to excess goods destined for the US ending up in Europe, or to the extent that tariffs on EU rise and retaliation happens and creates risks to economic growth, the ECB could resume cuts in the fall.
Well, Michelle, we really appreciate you being with us today and breaking down everything overseas for us. That's Michelle Gibley from Charles Schwab.